Hello and welcome to Business Now. I'm Malcolm Sime. Tonight we unpack the key business stories being hotly debated in Uganda's economy. From real estate market balancing fast rising urban demand against supply pressures and mortgage access to new central bank rules that will bring large SACCOs under new tighter supervision following changes to the microfinance deposit taking framework. In our financial market segment, we bring you a major story from ABSA Bank, which has unveiled a multi-currency virtual card alongside ABSA-Pay and ABSA-Pay-by-Link, new tools designed to make banking more convenient, more secure, and more accessible for individuals and businesses. And in Tech Now, we spotlight a new innovation from gnuGrid Credit Reference Bureau, the Loan Checker, a system set to guide digital lenders in managing risk in a sector where more than 5 trillion shillings has already been disbursed. This is Business Now. Let's take a look at the stories making headlines fast in the global markets. And one, global markets opened the week focused on US Federal Reserve as investors position for a likely interest rate cut that could reshape capital flows, weaken the dollar, and lift risk appetite across equities, bonds, and emerging markets. Trade policy uncertainty returned to the spotlight this week with new tariff risks and shifting supply chains, keeping investors cautious and forcing businesses to rethink sourcing, pricing, and investment strategies across major economies. And artificial intelligence remains at the center of global markets debate as rising investment in automation and digital infrastructure could affect corporate strategies, valuations, and capital allocation. And that's going to be across technology-driven sectors. Now, this is what all these stories mean for African markets. The focus will be on how shifting US interest rates, global trade realignments, and accelerating investment in technology redirect capital flows into the markets, borrowing costs and business opportunities across the African continent. This is Business Now. On our CEO segment this week, we talk housing because Uganda's real estate sector needs faster, clearer regulation to stabilize prices and manage growing structural risks. According to Moses Lutaro, the managing director at Brawl Property Group, the Pan-African commercial property services company, speaking to NTV Business Now at the Kampala Serena Conference Center, Lutaro said strong demand is being undermined by weak price controls and policy gaps, raising risks for developers, investors, and home buyers.
What typically we've seen in the sector for 2025, of course, like you mentioned, there's a lot of inflow, foreign direct investment into real estate and many other sectors. But I think largely for real estate, it's been because there's been a bit of stability at the macro level, economics. If you look at, growth in GDP, 6.3%, projected to grow double digit 2027. You've seen interest rates that are easing up. The central bank rate has, held ground for most of this year, which means interest rates are much more affordable. You've seen a lot of inflation under control, 3.8%. The target for Bank of Uganda is 5%. So it's doing well. And because real estate is a cyclic business which follows economic cycles, every time you see stability within either currency, like we've seen with the Uganda shilling appreciating against the dollar, we see that GDP is growing, you're seeing inflation is under control, interest rates are being under proper management, so it means investor confidence goes up.
Are those fundamentals really feeding into the prices?
Yes, if you look at on one side, the costs that inform your typical construction cost per square meter. So if you speak to people like at roofings or manufacturers of some of these inputs, they're telling you the cost of inputs that's stabilized. So which means if you're buying cement, it has been at a stable price. There's a time when these costs go out of hand. And once you have the shilling also stabilizing, also improves that. So what it means is that when I'm putting up an apartment block, my cost of construction is more predictable. And if it's more predictable, I can also price in a more predictable way. So if you're looking at it from that side, there's been quite stability, which has informed the cost of construction for construction materials. But also on the pricing side, we've not seen a lot of volatility in the interest rates regime. It's remained stable. So if you had a mortgage at 16%, this year I've not seen it going up. it has remained pretty much the same or under control. Some of them are even revised interest rates backwards. So because of that, it feeds down into the supply chain of the products, real estate, as well as, the consumer side. People are taking on mortgages.
Do those fundamentals feed into affordability at the end of the day? Because you are a property manager. Have you seen people leaving empty houses, or they are staying as a result of actually affording these houses? How are the prices on this market?
If you talk about affordability, you need to look at it from a context perspective. So because you have different segments of the market that you're looking at. But broadly speaking, if you talk about how the macroeconomic conditions has impacted the ability of people to afford housing or any other goods and services, I would want to draw attention to, if you look at, say, we now have what you call build to rent to own model sort of development. So before, we didn't have many players come into that space because of the risk it comes with, which means you're putting up a unit and say, okay, instead of buying it up front, 200 million or 300 million, pay 20 million or 30, then you pay me maybe 4 million shillings every month for 4 years and you own the house. So we've seen models like that coming into the market, meaning the investors are more comfortable doing that because then they can have the balance sheets to support them.
How desperate are we for a regulatory body for the real estate industry?
I think just to put into context, if you remember in the 2008 financial crisis, there were three parties to that party. There was real estate, there was insurance, there was banking. Now, banking in Uganda is heavily regulated, insurance is heavily regulated, real estate is being left out. So just that alone speaks volumes. Now, we are lucky because of the informal nature of our economy. We don't have a lot of mortgages, so you don't have things like mortgage-backed securities and all that. But I think it's about time that as a country think about real estate strategically, because with the population growing at that sort of rate, and more and more people are craving for financial services. I mean, the role of fintech, it means more and more people are getting into the banked economy. So it means we're going to have a lot of credit going out to the population. Now, if you don't regulate that sort of market, then we'll have a bubble at some point. So we need to record the transactions. But even not for just that, if you want to attract capital, if you want to attract scalable, projects, which will address things like affordable housing, all that, you need to be a transparent sector.
When you look at your industry, it is well known that there's a lot of demand, and there's a number that keeps being thrown around of 2-point-something million, deficit. I don't know whether that deficit ever changes. Okay, I know it's a sample, but then going forward, we might not know what is on the supply side, but you can look all over Kampala, greater metropolitan Kampala, you see construction going on. Mukono, Namugongo, this is where you sit, you see construction going on. And then you have fears of, are we not going to reach a time and we start seeing empty rooms? What is happening on the supply side?
Yes, so on the supply side, like you've put it, I think we've seen a lot of product. And whether it's housing, whether it is hospitality, whether it is logistics in terms of industrial properties, even commercial buildings, the supply is there. But just to look at the sticky one, which is housing, I think a lot of the supply we're seeing right now in the market is, of course, in the prime locations: Kololo, Nakasero, Naguru, Bugolobi, Mbuya, those sort of locations. Of course, those do not speak to the affordable, product. We have, what I would call fragmented. People do small-scale projects. If you're doing 10 apartments, 15 apartments, 20, and surprisingly, even with the pricing levels we're looking at in these suburbs, all those units are occupied one or the other. And it's important that you collect that data and be able to understand why. What we need from a supply side is critical mass. We need scalable investments. We need someone to come up and say, I'm putting up 1,000, affordable homes. That's when we'll start addressing the demand effectively.
Let's talk about the outlook for 2026. Yes. What do you see short term?
Yeah, for 2026, I think we're going to see more interest in the hospitality sector. You see what's happening with Uganda Airlines and the traffic at the airport going up. When you see the big guys coming into the market like Marriott, Hilton, it all speaks, good things about that sector. we're likely to see a lot of interest in, the logistics and warehousing space because of oil and gas. You need the logistics to support that. We're likely to see more interest in the data center space. People are looking for data centers and sites to put up those because of AI. And then we're likely to see a lot more interest within the student accommodation. I think there's a lot more interest from investors, private equity coming to that space. In terms of commercial office space, the projects in the pipeline, but I think the investors are more cautious in that space. Retail, not much is happening in that space, especially for the sophisticated retail, the big shopping centers, maybe the regional and the bigger ones. So we'll see a lot more of those, the neighborhood malls coming up, the strip malls, but not the big malls, which are maybe 20,000 square meters and above. Accommodation, residential, again, we're seeing a lot of that on the middle income to high end, but we also see a lot more interest in the new cities. Hoima stands out, of course, on the back of the new stadium there. You have the new international airport there. So all that is going to trigger a lot of activity in Hoima. We're seeing rentals in places like Mbale picking up quite well. Lira is another, sort of city to look out for. Of course, Gulu, Arua, those are, already out there. So we're likely to see investors divesting out of Kampala and looking at these other cities that have come up.
Now, the Bank Supervision Department at the Bank of Uganda is moving to tighten oversight on SACCOs. Listen to this. The Executive Director, David Kalyango, says Bank of Uganda retains regulatory authority on large SACCOs under the Microfinance Deposit-Taking Institutions Act. The move signals that Bank of Uganda is preparing to step up supervisory enforcement, clarifying lingering confusion around which institutions fall under its remit.
Now, the SACCOs that are considered large are those that have savings of over 1.5 billion and institutional capital of 500 million. So any SACCO that has that threshold is subject to regulation and supervision of the Bank of Uganda following the amendment of the MDI Act to bring those SACCOs under the responsibility of Bank of Uganda. So the enforcement is already underway, and I'm happy to report that we've so far licensed 3 large SACCOs. Our own statistics, when we did a survey, showed us that there are about 97 candidates for regulation and supervision under Bank of Uganda. Now, those that are that don't meet the threshold fall under the responsibility of Uganda Microfinance Regulatory Authority. So the enforcement is in line with the regulations of registered SACCOs of 2023, and they are published on the website. But enforcement mechanism includes, before I go to enforcement, we are carrying out a sensitization of the public regarding these large SACCOs, and this is jointly with all the key stakeholders that include the Uganda Microfinance Regulatory Authority, Ministry of Finance, Ministry of Trade, and all the other related parties. So this is a joint exercise to try and organize this sector that badly needs these services.
Let's stay with money, and in our capital market segment now this week, gnuGrid Credit Reference Bureau unveiled Loan Checker, a new credit scoring tool aimed at digital lenders and Tier 4 microfinance institutions. And according to gnuGrid's Chief Executive, David Opio, the platform will give lenders real-time credit and insights and a step that could reduce loan defaults and sharpen risk management, just as the country's digital payments and micro-lending sector continues to scale.
So a loan checker is one of the innovations we recently launched. We are still refining it, but basically that solution will be able to support lenders to know credit behavior of customers at any level from Airtel Money and MTN Momo. So it will cut across both networks. So a lender will be able to have that visibility of a customer's behavior across MTN Money and Airtel Money. Of recent, Daily Monitor noted that digital credits or mobile loans surged 3.5 trillion, and the repayment rate was quite also impressive to about 248.7%. So I think for me, that is one of the trends that is inspiring a lot of lenders that are still doing brick and mortar approach to deliver capital to go digital. So digital is a way to reach many customers in a more secure way, in a more seamless way. A loan book will go bad from inception, from how you select a customer, from really the business rules you set up, the selection rules, the exclusion rules. So that's what informs the result or the performance of that loan book. So lenders out there, if they are still relying on their own opinions to make lending decisions, I would say that's really absurd, and we call them upon to utilize CRB. We have seen and we have heard how our services are supporting lenders to make better lending decisions. They cannot continue to work or to operate blindly. And the reason why they are non-performing loans is because institutions or lenders tend to rely on their own way of doing things and ignore the aspect of data. So for us as gnuGrid, we believe that data is one of those insights, the ingredients that will support lenders to stay afloat and be able to scale in a more secure way. So if there is a lender that is trying to operate without CRB services or gnuGrid CRB services, then they should rethink that decision. We are open to support them. They can check out our website, gnuGridCRB.com, and you'll be able to get in touch with us, and we are willing to support them.
Lastly, Uganda's digital payments are growing fast, following trends across East Africa, driven by mobile banking and e-commerce. According to Bank of Uganda, digital transaction volumes have surged in recent years, reflecting a shift away from cash. In this context, ABSA Bank Uganda has launched the 3 new solutions. The first, a multi-currency virtual card, lets users manage several currencies in one digital wallet, ideal for online shopping, travel, or businesses, and mirrors successful models already used across Europe and South Africa.
Thank you so much for joining us today as we unveil 3 new digital solutions from ABSA. These innovations are designed to deliver convenience, better convenience, enhanced security, financial empowerment for individuals and businesses across the country. First of all, people may wonder why 3. We felt that if we could buy for one after another, there's quite a lot more coming up. So we'll cluster them together today because there's quite a lot more coming up. But for now, we produce 3, and the first one is the multi-currency virtual card. This is our first solution that we're launching today, a transformative tool for customers to transact across borders. This virtual card enables users to hold and manage up to 5 currencies in one card, from Uganda shillings, US dollars, euros, pounds, and the South African rand, all in a single digital platform. With this solution, the customer can create their own card instantly whenever they need, manage multiple currencies whenever they choose, and also enjoy a cost-effective, secure, and a virtual payment experience. The second is ABSA-Pay, and this solution is very key because it's designed for our customers who need fast, reliable, and access to payments without need for a physical debit or credit card. Right now, your phone can be your card because everything has been put into your phone. What does the customer have to do? Log into the ABSA internet banking app, go to card management, register and select ABSA-Pay, accept the terms and conditions, turn on your NFC functionality. Once you've activated, the customer can now make secure, contactless, tap and pay transactions using their phone. The third one, which I believe is critical for SM, is ABSA-Pay-by-Link. And for many of us, for those who could be in the tourism sector, sometimes you want to send somebody a bill to pay. And you no longer have to send a TP. Simply trigger a link, send to them, they make the payments instantly. You have the payment available onto your platform. SMEs definitely enjoy this This solution is tailor-made for business customers, especially SMEs, traders, and services providers to ensure they can make efficient and secure ways of receiving payments. With ABSA Pay-by-Link, businesses can generate secure payment links, share them with their customers, and the customers use this for making payments. This is Visa end-to-end enabled, and regardless of any bank you belong to, this payment can be made.
When we look at some of the numbers at Visa, we see that payments in Uganda are surging. We've seen over 2.1 active mobile banking users, and we've seen transaction values reaching UGX 15.5 trillion. So it's clear that the digital economy is thriving and growing in Uganda, and that's why these products are perfect timing and perfect fit. When we look at these products, I think something that we're not really saying that I want to highlight is the technology that goes behind it. So the tokenization, which is the actual capability within the ABSA-Pay, is essentially the forward step into the future of payments. If you were to look at any of the major technologies such as Apple Pay, Google Pay, when you look across the ecosystem, there's a lot of risk and identity solutions that protect customers. They don't even know they're being protected. It's the tokenization that makes that possible. Not many banks have tokenization in East Africa and even on the continent. So congratulations on implementing that. I know it was a labor of love, but congratulations on that. Tokenization also offers enhanced cybersecurity, which is going to be key for consumers as they come into the market, key for consumers here, but also it becomes a front door for everything around agentic commerce, AI enablement. And so I'm just underpinning all of this because this makes sure that ABSA Uganda is on the map for the next phase of digital payments. So congratulations.
This is Business Now, and that's all we had for you on this edition. For more updates, follow me, Malcolm Sime, on at X at Malcolm Sime, and check out all our stories on NTV Uganda YouTube channel. And for additional expert insights and regional business updates, read Daily Monitor, Business Daily, and the East African